Today is Monday, December 9th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the grains this morning, Mark, what are your expectations in tomorrow's USDA WASDE reports?
Well, I see no change to the current USDA soybean or wheat carryout estimates, remaining at 470 million bushels for beans, 815 million bushels for wheat. Longer term, if South American weather remains favorable and record soybean production and yields are realized, I would expect to see some of these soybean exports shift over into crush. However, for now, I see no change. Bean ending stocks have remained unchanged in the December WASDE report the last 3 years and 7 out of the last 10. So probably most attention in tomorrow's report, I think, will be on how the USDA handles soybean oil usage. The USDA is currently projecting exports at only 600 million pounds, while commitments with less than 3 months into the 24-25 marketing year are already well over 900 million pounds. So at minimum, I would expect the USDA to double their forecast for the 24-25 marketing year. This will likely also lead to a reduction in the amount of bean oil used for the production of biofuels, as there continues to remain a great deal of uncertainty over biofuel mandates and tax credits, with the Trump administration set to return to the Oval Office here in just over a month. And in corn, I look for lower ending stocks. My pre-report estimate is at 1.863 billion bushels. That's down 75 million from November. That on a combination of higher exports and usage for ethanol production. And this happens to be at the very low end of the range of estimates in the Reuters poll. The average guess is looking for about a 30 million bushel cut.
And Mark, we've seen a bit of a rebound in soybean prices. Do you think the lows are in there?
Yeah, we've seen spot January now did trade back up over the $10 level this morning for the first time in 3 weeks, perhaps coming on a little bit of short covering ahead of tomorrow's USDA data. But that said, I do think the path of least resistance remains to the downside, not just because of the threat of tariffs and trade tensions with China, with the incoming Trump administration, but more importantly, just due to the favorable growing conditions in South America, as prospects for record yields and production remain quite strong with each passing week. U.S. exports have been pretty strong. We're up 12% over year-ago levels, while the USDA forecast is only up 8%. However, this is expected to slip dramatically as we get into the new year. South American offers are well below the U.S. offers here come February. I do look for spot prices to dip back towards the 935 low that we had at the end of this past summer. At this point, I'm a little hesitant to think we're going to go down to or below the $9 level, as I do think we'll see some pretty good spillover support from the feed grains as we get in the lower below 950.
Mark Bowman, what are we looking for in tomorrow's report as it applies to the cotton market?
Well, it looks like we're going to see they're looking for a little bit of reduction, tightening of supply. We're looking for average expectations around 14.09 million bales, which would be down from 14.19 million in November. Exports expected at 11.26 million bales versus 11.30 million in November, and ending stocks around 4.23 million bales versus 4.3 million in November. Likewise, world ending stocks expected to be down about 10 million bales from to 75.65 million. This would leave the stocks usage ratio a little tighter, 32.1% for U.S. versus 32.8 in November. This is pretty much in the middle of the range of the last decade. Likewise with world stocks. Now, I do see a possibility that U.S. exports could be lowered, though, which would offset, maybe not tighten the situation. This is because cumulative cotton export sales are so low. They've been dragging. And currently, we're at about 65% of the USDA forecast for the marketing year versus a 5-year average around 73%. And normally this would point to a tendency for the USDA to lower its export sales estimate for the year. The question is whether they'll do it this time or some future date.
And Mark, looking at the cocoa market, what's the outlook for the 24-25 supply?
Well, it seems like, we're starting to think that we could have another supply deficit, global supply deficit in this year. This comes after hopes and expectations earlier this year that there would actually be a surplus. The crop outlook has dimmed over the last month or so, first from heavy rains in late October that may have damaged some of the beans and the pods. And now with the dry season emerging, it's been consistently dry now for several weeks, which is typical, but yet it leaves open the possibility that it could be worse and bring an early end to the harvest on the main crop. So, we're hearing estimates now of a deficit of 160, 200,000 metric tons. Last year's deficit was 478,000. The year before that, 64,000. And the year before that, 216,000. So year after year, the world consumes more than it produces, which means ever tightening supply. So far this year, the Ivory Coast arrivals, last week they were 85,000 tons, which is down from 92,000 the previous week, and the lowest in several weeks, but still well ahead of a year ago, 64,000. And but this time a little bit below the 5-year average. So they're starting to slip a little, but still much better than last year. Cumulative arrivals since October 1st, 820,000 tons versus 612,000 a year ago, and still above the 5-year average of 817,000.
Lastly, Mark, the natural gas is sharply higher this morning. What has changed there?
Well, we saw this big gap higher overnight. Now we're closing that gap. It was a bit baffling to me considering there's a generally warm weather trend, except that we're coming from very low levels. The weather does turn cold again for this week in the upper Midwest and the Great Lakes, but then it's warming up this weekend again. And both the 6 to 10 and 8 to 14 day forecast show above normal temperatures across almost the entire lower 48, except for maybe the southern half of Florida. This does not suggest a situation where we're going to have strong demand and give us much of a chance to lower the surplus that we're holding. And as of last week, U.S. gas storage was 4.9% above a year ago and 7.8% above average. And this was the highest for this point in the season since 2020.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.